Good morning, Tuesday, August 3rd. What's up, everybody? Um, Looks like we're kind of just right now, right at 6 a.m. That's what took me so long to get started. I saw this big green candle. We shot all the way up to 840 on about, I think originally it was maybe 30,000 volume. But a lot of volume coming in right now in comparison, just in this 5 minute candle. Um, in comparison to what we saw the rest of the pre-market. Just in the last 3 minutes, we've seen 35,000, 49,000, and then 9,000 right now in this minute candle. So, it looks like volume's starting to pick up right now, right at 6 a.m. Um, and it's moving in the right direction. We're at about 250,000 right now, which is a little bit more than what we've seen in previous days. I see Michael's here, SRT. What's up? Um, Star said, quick thoughts on ALK and love. I'm going to write that down and we'll go back to it in 1 second. Um, SRT, amazing. We ran up over 50 cents yesterday, and in the last hour, they beat it down to almost where we started. Um, yeah, I feel you. Man, I don't know. I mean, something was kind of crazy there. Like we were moving, we were moving, and a lot of other stocks weren't yesterday. And then right there at the end, but it seemed like that last hour, everything kind of got crashed down. It wasn't just Clove, even if you look at, let's say, like a GameStop, since I have it up, they kind of saw the same decline, you know, um, but that made GameStop kind of end negative on the day, whereas Clove, because we were so far ahead, um, it didn't have that big of an effect. We still ended up positive, but we did lose about 35 cents, I think. Um, and same thing with AMC, kind of that last 2 hours of the day, they just kind of tumbled down. Um, and I'm sure if we keep looking at, any stock really, it seemed like that was kind of the case around the entire market. But yeah, I don't know. It kind of sucks. But we finished positive, and I think that's the big thing. Ego, what's up? Hey, I gotta say too. Yesterday I brought up that I was thinking about, maybe doing a Discord or figuring out how and everything else. And I mean, Ego actually ended up hitting me up later and really been helping a lot and getting that thing off the ground. And I can't say enough how much I appreciate it. Thank you. So we are gonna probably have a Discord server at some point where we can, anyone who wants to join in on there, maybe in pre-market, we can kind of start the chatter up about, what the plays are for the day, what's happening with some of our favorite stocks, and then keep the conversation going throughout the day, even after we sign off the stream. So I'm excited about it. And again, thank you. I appreciate your help. For real, there's no way after looking at some of that stuff, I mean, I'm sure I could figure it out, but it would have took me way too long, and I don't have the time right now with all the stuff I have going on. So I appreciate it. Um, ATOS. All right, I'll look that one up too. I'm gonna write that one down. Michael, we'll check it out right now. 6-8 Spindrift. Levi, what's up? Justin. Tar Heel Blue. Let's go. Um, let's see here. FTDs, yeah. Um, Joseph, what's up? Skip. Let's see here. I know I'm hella behind right now. Lisa's here. Scotty. Um, Genetic Nate. Good morning. What's up, Genetic Nate? How's it going? I think I'm pretty caught up. Christina, what's up? And Christina says Clove made a new announcement. Let me see. Just gonna check that out real quick and see if it pops up on my news ticker. Yeah. Okay. Says here, Clover Health launches in Florida in partnership with Value H. Okay. So announced a strategic partnership with ValueH, a leading member of organization focused on value-based care. Through the arrangement, ValueH will support accountable care organizations, ACOs, and management service organizations, MSOs, participating in Clover's direct contracting entity beginning in 2022. Clover's DCE will enable providers to manage the care of their original Medicare patients with the Clover Assistant. Then it talks a little bit about Clover Assistant. Participating providers can benefit from unified actionable data, personalized care plans, simple, fast reimbursement. Okay. Yeah, so I mean, to me that seems pretty bullish. I'm sure we'll start jumping into that a little bit more, especially like after the stream, kind of look over everything and see what's up. But yeah, that absolutely seems like some bullish news. And that came out right at 6, and that's probably why we're seeing this increase in volume right here. When I first turned the stream on, if you're jumping in a little bit late, right at 6 a.m., we saw a ton of volume pour in comparison to, previous candles, 118,000 hitting as high as 842. And now this second candle is already at 141,000 and up as high as 846. So, in regards to like where Clove's been in recent days, just if my memory serves correctly, I want to say we were somewhere around like 150 to 200,000 going into, the actual going into the market open. And right now we just hit basically that amount in the last two 5-minute candles, and we're trading at almost 431,000 right now at what, still 21 minutes to market open. So this could be a pretty decent catalyst that'll kind of get this stock rolling today. It should be kind of exciting. Let's see what happens there. So Lisa says, I looked in dark pool screenshots and had saw an equity trade through the dark pool, but the venue was NASDAQ. Should there be a trade coming in from NASDAQ? No, you know what? I talked about that on my video last night too. Wall Street Bet Degenerate had put that out there. And let me see if I got this right screenshot here. Yeah, so I think this is probably what you're talking about. And I mentioned this in the video I did last night, but yeah, this was like right near the close yesterday. The venue on the actual, we were talking about how these are the different exchanges, and oh, what did I do with that picture? I just lost it. Let me open it back up. There we go. All right. So these are the different exchanges that orders come in on, right? And usually a dark pool print will get printed to like an ECN, or it'll show that it came in on an ATS or one of the dark pool exchanges. This one shows 1.1 million shares came in on the NASDAQ. It was either a buy or a sell order, and that didn't move the price at all, which is insane. I mean, if you look here, a move from 100 share order moved the price, down 17 cents, or 2 cents, and then you see all these orders kind of kept the price flat. And then a buy order of 663 shares moved us up a penny. And then this just kind of like, I mean, regardless whether that was a sell or a buy, 1.1 million shares should move the price in some sort of direction, and it didn't. Especially when you look at the level too. It's not like there was some sort of sell wall or buy wall on here. So my guess, Lisa, and I kind of said this in the chat last night, was that a market maker took that on as a short position. So essentially, what happens when an order gets routed, right? You put in your buy order. It hits it. Now, the market maker has the ability on where to route it. They could route it straight to an exchange. They can route it to a dark pool, or they have the ability to take that order on themselves from their own liquidity, like the shares they're holding. Now, I doubt that the market maker was actually holding 1.1 million shares which means let's say that was a buy order, they would then give you the 1.1 million shares, and they would say, okay, I'm taking that out of my own stash. And so it would print to the ticker, and it also would make sense on why, or to the tape, on why so let's say someone put that order through, and then the market maker says, okay, I'll fill that at 815, and that drops the price down to 815. But the market maker doesn't actually have those shares, so essentially that's going to show up as a failure to deliver later, right? So when we get our failure to deliver report on for August 2nd, I would imagine that there'll at least be 1.1 million shares in there, that some market maker just took on. And unless they plan on accumulating those shares in the next 2 days and then delivering them to the clearinghouse, which is how much time frame I think they have, is like T+2 to deliver share orders. So before it becomes an FTD. So, but yeah, there was something definitely kind of crazy going on with that buy order yesterday, or sell, whatever that is. We can't really tell. Usually the way these work is, I believe if it's green, that means it was like a market order that went up to the ask. If it's red, it was a sell order that went down to the bid. And then these are ones that kind of met in the middle, when you start seeing different colors. That's the way my interpretation of it is. Hey, Dr. Coach B. Not yet. I'm not a doctor yet, but I'm almost there. Sorry, let me catch back up with the chat. Peter's in the house. If anyone's joining late, yeah, Clove did make an announcement this morning that they're basically a new partnership in Florida. So that should be good. Let me see. You know what, co-creator? I think I do. I think I do have my thing set on top chat. Let me switch it. I just saw yours right now. And did you say something? I'm trying to skip around now. Went to the ER last weekend, and they said I knew that. Okay, damn, you went back to the ER. Okay, are you still in the hospital right now, or are you or did you just have to go in? But man, I'm sending my thoughts out to you, bro. I mean, I hope you get through that. I know with that, I never had diverticulitis, but I had some similar stuff. I know me and you were kind of talking offline about it, but yeah, that stomach pain, man, is no joke. Scotty's in the house. I'm trying to catch up now, guys, and I just put my chat to live, so I should be getting them in order. Okay, sorry, co-creator. I just seen that. I'm sorry, man. Target short seller, what's up? Shrimply, holiday option. All right, so it looks like I got caught up with the chat, and I put it on. I got my live chat turned on. Co-creator, if you're still here, I'm sorry, bro. Hope you're feeling better, and absolutely get some rest. I'll hit you up later after the stream. All right, so yeah, so we got some news with Clove, new partnership in Florida. I think that's why we're seeing this increase right now in volume, and hopefully maybe this will kind of give us that push we needed. Max pain for the week is at 850. The other things that I pointed out in that video I made last night too, and I just want to zoom into this so we can take a look at it here. But scoot this over. And I'm sure most of you guys kind of know already, but going back to July 15th, and I know I've brought this up, I drew this line here. This is $8. And, as you can see, we fell below $8, I think 8 times now, including yesterday. We touched down below $8, but they haven't been able to get us to close below 8. And when you think about all the, BS that's been going on with the, failure to deliver, short volume. There was one day where we saw some insane short volume, and just everything else that's kind of been happening with this stock and the downward pressure we've been seeing. We have not closed below $8. So to me, we found our base. I don't know where you would want to draw the line at, if it's at 786 or up here or whatever. But to me, this $8 mark, anytime we get below it, we're able to push back up. And Really bullish, in that regard from my standpoint. We did cross over on the MACD yesterday. I know Tar Heel's been talking about that golden cross, and to me, we should get that today. With the way this is mine's are a little bit different. I look at EMAs, not SMAs, so it's not mine isn't showing that yet. Um, we actually, made some of those crosses back here. EMAs move a little bit faster, but we should be getting that today for sure. I know it was starting to touch yesterday, but if we're able to finish green and maybe closing that area somewhere closer to around where we were at yesterday, around 850, which we're getting there right now in the pre-market. Um, RSI is slowly starting to pick up. We're somewhere around 40 right now. And, I just, and I really feel like we found our bottom and we're starting to get there. So let's see here. Let me zoom back in. I got to get my settings set back up right now that I'm back in Thinkorswim. I feel a lot better being in this software, but it's a little bit different. Just getting I got to get it back set up for the streams exactly the way I like it. All right, so I did have some requests to check out some other stocks. I'll get on that right now. Sorry, I wasn't trying to ignore you, Michael, and whoever. I wrote down a couple of them, but I wanted to get through some of this other stuff, and then we got that news on Clove. So all exciting things. Actually, real quick before we even get into that, so in regards to some of the other stocks I'm watching, DraftKings earnings is right around the corner. I think they're on Friday. Really expecting this stock to kind of take off after earnings. So more of a long-term play, but BNGO is reporting earnings after hours tomorrow. And typically for BNGO, I think we see about a 10% move when that happens. And we're already starting to see the stock kind of rise up over the last couple of days. So really hoping that'll kind of get it out of its funk. But let's take a look at some of these stocks. So ALK. Let me see here. I don't know anything about what's going on with these stocks, so that makes it kind of hard. But it looks like it's trading kind of flat in pre-market. Let me see. What was the other one you said? LUV. And they're both kind of trading underneath the moving averages, but I mean, so is Clove right now too. It's really hard. I don't know enough about these companies. I think LUV is a airline, right? Maybe Southwest, but yeah, I don't really have a take on them right now. Unless you want, I could check out the option chain and kind of see. But just looking at the daily charts, there's nothing that really like pops out at me. TCAT looks like probably this. I don't know who asked about TCAT, but that looks like it maybe found its bottom and it's starting to curl up. We have a crossover on the MACD. Um, yeah, I would say I like this TCAT out of all of them. Just looking at the daily chart. Um, but let's go check out the options chain on some of these. Get back to 1 day 5 minute. All right. I'm gonna throw this 5 minute candle up here too while we're sitting here. Actually, you know what? I wanted to look at Clove options as well. So yesterday we did see an increase in volume. It looks like that was mostly on the sell side. like people were getting kind of dumping their calls because, I mean, we still have, this is August 6th now. There was a ton of volume here if you watched my video last night, but it looks like a decrease in open interest. So 8,000 to 1,000, 8,000 to 1,000. I believe that was a decrease. But this is still pretty heavily loaded up in comparison to over here because after we get past 950 strike, there's not even 1,000 puts at anything. So this is all pretty significant considering that they're weeklies. As we come out to August 20th, things are starting to get really lopsided, you know, with those 10,000, more than 10,000 increase at all the dollar strikes. They just added these 50-cent marks yesterday, and it looks like we kind of got some increase in there. But look at this, you know, build up here, even at 13, 14, 15, 1750. So yeah, I mean the option chain for Clove is really starting to look loaded. I believe. Oh, you know what it was? Michael was asking about a golden cross on ATOS. I just remembered what that was. So let me go back and look. Yeah, it looks like more of a downward cross is what you're seeing here. You know, and for me, I know I said the other day, like I was looking for ATOS to kind of come down and touch below 3 before entering back in, and it's there now. So this is one that I'm going to kind of look at and maybe look for some support levels on. Kind of hard to do in this little screen right here, but that was one that I kind of have, you know, tagged as something that I want to look for a new entry point. We might be getting close to that, especially when you think about how much it's lost off this high and where you know, analyst ratings are putting it and everything else. But yeah, I don't see any bullish indicators on that chart right now. All right, looks like we're getting what, 5 minutes from the open. Clove's looking pretty hot as I look around the rest of the market. BNGO's up a little bit. DraftKings up about 10 cents. Nothing major considering its share price. But that's about it. A lot of these other stocks seem to be trading downwards. The S&P 500 right now is actually up $1. Tesla's ripping right now. Closed at 709 yesterday, looking to open up around 720. All right, so let's look at the option chain on some of these other ones real quick. Or let me get back in the chat. Fluffer's here. Good morning. SRT saying to check out the squeeze momentum. Guys, does it seem like my chat is set to live, or am I Champ 5 was saying there's hidden divergence on MACD right now. Looks a lot like that. Squeeze momentum. Yeah, that squeeze Momo indicator. I know you guys are talking down here in the chat, but I used to use that a lot on Thinkorswim. I could probably pull that up here in a little bit just so we could take a look at it. Maybe go over it a little bit, but I just got to find which study where it's at in my studies. But I mean, Thinkorswim has so many studies. Like if you just, I mean, you know, like here's the alphabetical list. So I'll go in there and find it, and if not, I could even try to find that in my. I'll do a little search and figure out where it's at, and we could check that out. But I've seen that before, and there's like some little dots, and as the dots get bigger, I think that's kind of showing you that the stock's ready to squeeze, something along those lines. Ken Lynn in the house, what's up? Fluffer says Mr. Antonio Costa says we're running today past 850. Let's do it. Yeah, I mean, we got some good news, potential catalyst, right? Like that's all it really takes. You get some news coming in on a stock, the stock gets a little bit more buying pressure behind it. It's already heavily manipulated, heavily shorted. We already have an option chain that's loaded up, so we just need that little nudge, and that little nudge can be what, you know, kind of really bust this thing wide open. Oh, okay. Sorry, Michael. TCAT option chain. So it's saying there is no options on TCAT. So, Here, man. Let me do this just so I can get a better look at it for you. So yeah, I mean TCAT looks to be rolling up. I don't know again like what was causing this, but it's saying there's no options on it. So it definitely wasn't a gamma squeeze. Um, NFT related names move higher on volume. Um, Watching companies in relation to NFTs. Okay. Yeah, I don't know. It definitely wasn't a gamma squeeze. It's saying that there's no options on it. So let me see here. Let me get my 1 day stuff up. I mean, it crossed over here. It was grossly undersold. I mean, it was trading in like the 24 range, and now you're still at 41. I would assume this stock has a lot more room to run. Just looking at where it was this like an all time? I mean, if we look back here, yeah, it was a penny stock. Got a lot of momentum in March, running up to 74, but um, it's still kind of in this oversold territory. I would expect maybe some resistance at 871. But if it can close above there, I think it's still got some room to run up. Um, I don't know. Just curious because you said dealing in NFTs, how Muds is doing. So Muds is a stock that I never talk about, but I do have a small position in. So it looks like they gapped up yesterday too. Um, Muds is basically a SPAC that's merging with Tops, and with the intention of creating NFTs. They already have been, and Tops has been putting out some NFTs recently. But I mean, for me, Tops has a ton of intellectual property, and so this was a stock that I started accumulating and just kind of averaging down on just as a long-term play. Anytime you can get a SPAC close to 10, so this was going to kind of be my NFT play for the future, just kind of buying in here because even if NFTs don't work out, I feel like Tops, I mean, is a strong company that's been running for what almost 100 years, and I know that's not what you were asking about, but it just wanted me to go in and check because I mean, like I said, I have some Muds, but it's more just an accumulation type thing that I'm just been buying up in a separate account and just thinking that one day this thing will really take off if NFTs take off. All right, so that was the opening bell. Let me get us back to the charts. See what's going on here. Can you guys hear that opening bell on your end? Just out of curiosity. Get these charts set back up. Oh wow. AMC and GameStop getting hit pretty hard right now. Looks like the SPY, like I said, is starting off up on the day and it's not going down, but seeing significant drops in a lot of stocks right now. At least the ones on my watch list. Okay, so you guys could hear the bell. That's great. So my Thinkorswim app has a like a built-in, it has the opening bell and the closing bell. Um, let's see here. Justin says, "Can we karate kick Max Payne Thursday and Friday?" I mean, yeah, if we can get past 850 and then kind of like find that as a new support level, yeah. It just seems like the last 4 or 5, maybe even 6 weeks, we've been running past Max Payne intra week, and then they're able to push us down Thursday and Friday. Um, yeah, Tops is in baseball's cards, Michael. So basically, Muds MUDS, and this is going back to I think like April is when I started kind of accumulating shares in it. And when they announced the merger, it ran up to about $18. They haven't merged yet, but there is like a upcoming vote or something, I think, in the next couple weeks. I've been like loosely following it, and all the NFT stocks and a lot of SPACs have been getting hit hard. So it's back down in like that $11 range, which to me, the closer you can get a SPAC to $10, the better off you are. Um, But yeah, so they're merging with Tops. And from my thought process of it is this, right? Like Topps owns so much intellectual property. If you think about all the years dating back, I mean, just historical cards that can eventually become NFTs, and not just baseball. I mean, they've done basketball and NBA and NFL in the past. They don't have the rights to the current NBA and NFL cards, but I mean, they used to do WWE. They've done Disney. I think top CEO right now or chairman of their board is a former Disney CEO, and that's intriguing to me too because like Disney's all about intellectual property. That's why they're buying up Marvel and all these other companies. So that Muds stock is one that I've really been keeping an eye on. And, now that you just kind of made me go look at it and I see that it's down at 11, I might actually go in and add on a little bit to my position there because um, once that merger takes place, like even if NFTs don't take off, Tops has been a successful company. I mean, what other trading card company's been around as long as they have? And the collectibles have always been big. But I know they got bigger, I feel like, during COVID. I was reading, just people at home and kind of getting back into their card collections. And with NFTs kind of taking off, if they ever really do just explode, and kind of become a part of of something that's long lasting in the future, I think Tops would have a good opportunity to take a stranglehold of that marketplace with all the IP that they have. Anyways, enough about Tops trading cards. Let's see. Board says we're close to AMC's volume at open right now. Yeah, it looks like we've hit 1.4 million volume on this particular candle right now. We're at what 671,000, and AMC, this candle is 166. So we've actually surpassed. Oh, that's GME. I'm tripping. No, this candle over here for AMC is 2 million. But yeah, there we go. 850, just past max pain. Just past yesterday's high. Realistically, we want to hold this number though, right? I mean, we don't want to get pushed down um, too low. If we can hold it, or even if we do, and then we can continue to climb up and kind of stair step up off that. But just hitting 850 or getting above there isn't it. We want to actually close some candles above it. But we're definitely moving in the right direction. AMC looks to be down 3.3. I mean, we're still in the first 5 minutes. GameStop down 4%. God, that's you guys know I have a position in GameStop that I've been holding for a long time, and oh man, especially considering how high it was in June. Um, really need some bounce back there, but yeah, Clove, we're looking strong. Let's see if we can get this candle above 850 and stay up there. RSI on the 5 minute isn't looking too great. I mean, we're almost at 70 right now. Um, see on the 1 minute. All right. 20 million FTDs, coach. What do you think? All right. So yeah, I meant to get to that too. I didn't make any notes this morning. Usually I kind of write down notes of what I'm going to talk about, and let me see. Um all right, so I'm just trying to catch up with the chat. But yeah, those FTDs were insane. Like, I mean, if you look at I didn't actually go back and look through all of GameStop and AMC's FTDs, but I know I think Tar Heel and Al Trades mentioned that was more FTDs than either one of those stocks has seen. I didn't go back and look to confirm that, but if that's true, I mean, shit, that's saying a lot in terms of the manipulation going on in the stock. Now, the interesting thing about those FTDs, and you know what, I don't really care about AMC right now, so I'm gonna go do this. I'm gonna put Clove down here and pull up a daily chart just so we can kind of talk about this. Um, while we're looking. But um, let's see here. Let me turn these studies off. All right. So these FTDs came in on, I think the 19 million were somewhere around July 8th. We're trading at 9.3, right? So they're saying that there was 19 million failure to delivers. I want to say it was July 8th. And somehow, as the stock continued to trend downwards, by the 14th, right here, they're saying that they were all gone. There was only like 100,000 left. So that means that 19 million failure to delivers were delivered, to the clearinghouse, and the stock traded downwards. My assumption would be that those stocks weren't actually bought in the open market. Basically they probably just kicked the can down the road a little bit, um, and figured out a way. I mean, there's plenty of different ways that they could have gone about it, but figured out a way to basically come up with those shares, deliver them. But all that does is just prolong it. So, one way, and I talked about this yesterday, like basically it's just a matter of getting your hands on shares, right? But you're still going to end up owing them in the long run. So I know Tar Heels talked about the rehypothecation, which is basically, buying an agreement that I'm going to buy shares from you. If you give me your shares now, I'll pay you more for them later, type of deal. In a nutshell, just to make it simple. So even though you're getting those shares now and you're able to go deliver them to the clearinghouse, you're still now on the hook where you still have to go out and buy shares. And as the stock price goes higher, you're in danger of losing more money for doing that. Another way that you could potentially do it is, let's say deep in the money options. If I wanted to use that to go in and get my shares, I could basically go in, buy enough deep in the money options and exercise them, which wouldn't really affect the share price, right? So it would if the market maker actually hedged them right when they sold them to you. But my assumption is that's the type of buy order that if someone's willing to sell you that many deep in the money options, and only make a 10-cent premium off it, the market maker would be doing it as a naked short, and that means that they would then basically you're just transferring those 19 million failure to delivers over to the market maker. You also have, like where yesterday we saw at the end of the day, 1.1 million buy order come in through the NASDAQ that didn't move the share price. So that, to me, that would show that the market maker's taking on a naked short position. And now that's going to be a failure to deliver. So in a nutshell, and just to kind of summarize this, basically, if they didn't actually cover it and they just kicked the can down the road by basically borrowing from somebody else, that's all that's happening. They're either borrowing from someone else and delivering them to the clearinghouse, but now that's just going to create another failure to deliver, or they're transferring the liability over to somebody else, right? And if these guys are kind of colluding in the manipulation of Clove, then that why wouldn't you do that, right? So that'd be like if me and Tar Heel are both shorting a stock. I have 1 million in failure to delivers that I need to deliver by tomorrow. All right, Tar Heel, let me borrow your stock and I'll go deliver it. So now I borrow the stock from him, go give it to the clearinghouse, and now he owes the clearinghouse 1 million shares, and now he gets 21 days on his failure to deliver to come up with it. And so now that kicked the can down the road, and now when it gets down to it and he's got to come up with it, now we're just going to play that same game back and forth and keep moving the stock back and forth. I mean, it's a lot more in depth than that, but that's basically what they're doing, is figuring out ways to come up with shares to deliver them today. And it's just transferring that liability of FTDs onto someone else. Those shares still need to get bought, and it just becomes more massive and enormous for them, right? Because if you're doing that with FTDs right now I'd say they're probably ahead, because like those 19 million failure to delivers that came in, stock was trading at $9. So if you went in and went to go buy the stock now at 8.37, you actually saved a dollar. But as they continue to do this and kick the can, eventually what's going to happen is the stock will go up to, let's say, $9, $10, $11. Well, now you're underwater. I mean, now you can only kick it so far, right? And then eventually you're going to have to buy it back, and the stock's way out of your price range, and now you're really underwater, not to mention the short interest, because you also have short shares out there and everything else. So, I don't know. I don't think those and I guess to get into the other part of it, I mean just in general, 19 million shares failed to deliver is a lot considering our float. I think our float's somewhere around 160, 170 million. Um and I don't know. It's just insane. It just shows how manipulated the stock is, and to me, that's bullish, right? I mean, that means this is absolutely still, short squeeze territory, and has us in that position, ready to strike. And like I keep saying, the option chain's loaded up and ready to go. Josh says, "What is Value H?" You know what? I didn't even realize I still had that open. Um, it looked like from what I was looking at there, and I don't know if did someone already answer that in the chat, but let me pull it up real quick. So anyone who's joining us kind of late, there was an announcement this morning that Clove, and I'll bring this over. Okay, so I'll just try to read this, try to skim through it, but strategic partnership with Value H, a leading member organization focused on value-based care. So it sounds like an organization of maybe medical providers. Value H will support accountable care organizations and management services organizations participating in Clover's direct contracting entity. So the big thing there, I mean, I don't think it says exactly how many members they have, but I mean, that's more expansion and growth, I guess, in Florida. And then on top of that, I believe it's, Value H in Florida. And then on top of that, the fact that it's going into the DCE model because that's the one that Clove can make more money off of. So definitely bullish news. Let's see. I think I'm behind again. Oh yeah, Levi, you were talking about that AMC straddle yesterday. Yeah. Now, depending on when the expiration is, right? You can always you might be able to profit out both ways. Let me see here. Thomas says the 8.5 resistance on Clove is insane. I wasn't even looking at the level 2 when it popped up. For anyone who's, I don't know if you guys can even see this shit. It might be too small for you, but for Thinkorswim, because I was using a different software before, but for Thinkorswim, this is in hundreds. So when you see like at 830, there's 17 or 33, that's 3,300 shares, not just 34 shares, obviously. But yeah, it looks like quite a bit up here. And if anyone else is familiar with Thinkorswim, I know there's a way, and I'm trying to figure it out. I'm gonna write that down right now, to look into my level 2 data because there's I want to see everything and not just the top bid for each exchange. Now that I'm used to looking at the other level 2s, that's starting to get on my nerves. I can never be happy with my software, I guess. DJ Tartar says AHPI is jumping again. Yeah, up 15% right now. Like every day something's running. And that's why, I know if anyone who's been on here has heard me say this in the past that, it's like there'll always be other plays, if you kind of miss out on the I'm going to leave the 1 minute view on right now. If you miss out on a play or you feel like you missed out on a play, wait for a good entry point. There'll always be another entry point or there'll always be another play. You don't want to go rushing into a stock that's already up 30-40%. You don't know what the hell's going on with it, and or up 100% because now you're just risking, and chances are it's probably going to fall back down. But I mean, that happens with everything. Even if you look back at Clove, it goes on a big run, it ends up coming down and consolidating. But when you see something that's running like that, unless you know why it's happening or what's happening with it, I wouldn't rush into it. There'll always be something else. So Fluffer says APT. I don't know, Alpha Protec. Not sure what's going on with that one. But it does look like it's up 2.3%. Coming off a low at 1014 yesterday. It just bounced off the what is that? My 21-day moving average, or EMA, 21-day EMA. Looking to hopefully regain VWAP. I don't know if you're in that one, Fluffer, but let's see here. I'm way behind in the chat, guys. Sorry. I'm just gonna skip through some of these. Because you guys are saying it's ripping and now we're down below VWAP, so I know I'm way behind. Let's see. Roger says sounds a lot like check kiting. Absolutely, that's basically what it is, right? I mean, they're just transferring liability around and moving it from hedge fund to hedge fund, or from hedge fund to market maker. And that's the shitty thing about our market too, is that we allow market makers. I guess they serve a purpose. They're supposed to be in there to create liquidity and all that kind of stuff. But to me, it just sounds like a racket, especially when these market makers are allowed to own hedge funds that can operate, in short stocks and all that kind of stuff, where market makers are just supposed to profit off the bid-ask spread and executing your orders. But when you have two arms of the same company, so to speak, and they're basically allows them to collude together, even though they say they don't. DJ says, even with all that manipulation and dodgy stuff going on, it all still catches up with them eventually, right? Yeah, I mean, eventually they have to cover those shares, right? And I mean, I'm not sure. I'll look that up too. I meant to look that up. What the actual punishment is for like the FTDs. I know it's like fines and everything, but I would imagine at some point you would think the SEC or someone would step in and say, "Hey, man, you got to cover this shit." But yeah, I mean, eventually those shares gotta turn up, right? Because you owe them to someone. So what these failure to delivers basically are is like, the clearinghouse is just taking shares from one person and giving them to someone else. At the end of the day, they're just taking all these shares. So when you fail to deliver your shares to the clearinghouse, there's someone else on the other end of that transaction that is out their shares, that needs their shares. That could be a big institution, like BlackRock or someone like that, or a brokerage like TD Ameritrade or Fidelity. But there's somebody that the clearinghouse needs to give these shares to, and they're going to be waiting on their shares too. Like, hey, you haven't delivered me my shares yet. And I'm sure the clearinghouse will just take the next amount of shares that come in and give them to them, and then still wait for those ones. So, but there's always going to be somebody missing those shares as long as those failure to delivers exist. So at some point they have to go in and get those shares. Now, in their eyes, what they would like to do is drive this stock down to $3 and then go cover all their failure to delivers, or drive the stock into bankruptcy and never have to cover them. But I don't see that happening with Clove. I mean, one, we've been holding support at $8 for, almost 3 weeks now. And that's not to say that they can't push us below 8, but I mean, with the positive news that, like we just saw some today, we have earnings right around the corner. This company's continuing to grow. This isn't a company that's going to go bankrupt. Okay. Not anytime soon. I mean, this is a company that's going to continue to grow and eventually, start making money. And, and then once we get the star rating and everything else, like, so that they're not going to get that outcome that they're looking for in this company. And I think, eventually they are going to have to deliver those shares. That's just how it works. So Josh says, how can we F them over? Basically, how could we win? I mean, the only thing we could really do as retail is just continue to buy shares and hold them, right? So whenever we buy shares and hold on to them, we're taking shares out of circulation. So the more and more people, even if you're buying 10 shares, 20 shares, whatever, one share or thousands of shares, if you own them and you turn off lending on it, that allows them less shares to borrow. Now, yeah, they could still go in and make it short. They're not supposed to, but we know that they do. And what's that do? That just creates more failure to deliver. So it just digs a deeper hole. But the more shares we buy, we hold, takes shares out of circulation, gives them less opportunity to buy shares back. When they're shorting this stock down and it goes down and hits 822, they want us to sell our shares back into the market, and that's how they can accumulate real shares to cover those FTDs and to cover those naked shorts. But we're not allowing them to do that if we just continue to buy and hold. There you go with the Popeye quote. I'll gladly pay you Thursday for a hamburger today. Um, Tar Heel. Oh man, Los Locos. That's is that from Short Circuit? Is it Short Circuit, the one with the robot with Johnny Five? I'm pretty sure that's where that quote's from. Oh, Board just said it too. All right, all right. I'm behind. Sorry guys, I'm catching up. Uh, all you guys got that. I know I'm coming down right now and seeing all that. I haven't showed my kids Short Circuit yet. That's one that I'm gonna have to show them. I'm gonna actually write that down right now too. They're always looking for movies to watch, and I always like showing them movies I used to watch growing up. Um, let's see here. Franklin says last night Altrades did a comparison on FTDs with Clove, AMC, and GameStop. AMC and GameStop had massive FTDs and about 3 months later exploded. Patience is the key. They have to pay up at some point. Yeah, so there is something to that. So, and just watching it, because I watched that video with Al this morning, and I would say there's a little bit, he's right in what he's saying, but there's a little bit kind of missing there as well. So, um, basically, what I noticed, at least with GameStop with the FTDs, is they were on that T21 cycle. So when you would see a big massive amount of FTDs show up, like how we saw 19 million on July 8th for Clove, um, basically they would kick the can down the road and then come back in and cover those up 21 days later, and you would see significant increases 21 days later. 21 plus I think 2, because it was something around there, but you would see those increases then, and then again with bigger FTD dates 35 days later. And so GameStop was kind of rolling on this cycle, and it still kind of is. um the difference with AM, and so that's something that I think, just because the chart was zoomed out, that Al may have missed. I mean, there was significant increases in that chart, like, where it would go from like 150 to 350. You're talking about, a stock almost doubling in a matter of 3 or 4 days, and those all lined up and correlated on, about a 21-day cycle coming after all those FTDs. AMC, on the other hand, I think what happened, because AMC ended up blowing past similar resistance levels, and it did have to do with exactly what Al was talking about, where it was 2 to 3 months later. But what happened with AMC is, where GameStop kind of got pushed down at 350 again, because that was like a huge resistance level. AMC blew past their resistance level and went on that run to 75. But I think that was more options induced at that point, almost the opposite of what I've been talking about, where the gamma squeeze kicks off a short squeeze. With AMC, it was more the FTD covering came in, pushed the price up, and that kicked off a gamma squeeze, which sent it all the way up to the top of the option chain at 72. But, I mean, definitely great information and all that. I love watching Al's videos, and I learned something even about that. I can't think of the name of that dark pool data. I guess he called and talked to the guy who made the website. But yeah, I just think they all kind of like. I wouldn't get hinged on, okay, well, because it happened with AMC 3 months later, that means it's going to happen with us 3 months later. There's so many other factors that go into it, and especially like, because GameStop's wasn't really the same type of explosion 3 months later like you saw with AMC. GameStop's was more, like I said, in smaller cycles. So they're all these stocks are different, all have different floats. A lot of the same players shorting them, but it's there's just so many different variables. And again, I think the option chain has a lot to do with it too. We've seen that with on the last run up. I know I've talked offline with Tar Heel about this before, but to me, what I see happening is, yeah, these FTDs being delivered can absolutely make us push, give us that nudge that we need to maybe get us past 10 or 11. But what I really see happening with Clove in terms of how this is going to play out, and again, this is all speculation and theory, but I think we'll end up hitting another gamma squeeze. And this time the gamma squeeze is going to take us to, 43, because that's where the top of the option chain is. So, maybe we hit 45, 46, 47, and then we're going to settle back out somewhere. Where we settle out, who knows? But when we reach 43, can that force people to cover? Yeah. But I would imagine to really put pressure on shorts and kick off a short squeeze, we want to see this price probably to about maybe around 40 to $60, maybe 40 to $100, and then a short squeeze kicks off, and that would propel us up even higher. Kind of like GameStop levels where we're hitting like $400, something like that. I can see that happening, but I think it's going to be a slow staircase up. And what I mean by that is maybe we gamma squeeze up to 50 this time, come down and settle at 20, trade sideways for a little bit, gamma squeeze up again, but this time to 80, trade sideways a little bit, and then one of these gamma squeezes that kicks off the short squeeze. That's what I think. But I mean, I could be completely wrong. I have no idea. It's just that's just my own speculation and assumption. See that people think Clover Health should be like $30, but that would be like 11 billion valuation, but the company is not profitable. Yeah. I mean, I think in the short term, like right now, we should be trading somewhere around $20 to $30. And that's just based off of other comparable um, companies, like other companies that came out around the same time, IPO'd around the same time, that are into these same models that we're in, and they're basing that off how many bodies they're managing compared to how many bodies and lives we're managing at Clover Health. We should be trading somewhere around that $20 range, $30 range, and that doesn't include the Clover Assistant either. So the company's not profitable right now because they're still in the opening stages. And I mean, that's usually the case with anybody in this sector. So, but as they continue to grow, the more bodies they get under management, the cheaper that all their costs are going to end up becoming. And that's how they become profitable. And then there's so many other things too, like the star rating. But to me, it's really about the growth and also about the Clover Assistance, which isn't priced into this at all and isn't comparable with any other company. Like if you start comparing how much other companies are making that are in the same field and dealing with these MA and DC plans and everything, no one else has Clover Assistant in their back pocket, and Clove does. So I think that's going to be another huge one, to where price target long term, triple digits, high triple digits. I think the stock's going to continue to grow, probably end up splitting a couple times. Like I think this thing's going to just be massive because it's a technology company too, right? It's not just a health insurance company. Are technicals even relevant on Clove, given they're just bombing whenever they want? Um, I would say not so much when you're looking at like a 1 minute or a 5 minute or stuff like that. It's really hard to I mean, there are people that are watching this stock to day trade it, I guess, but not with the type of volume we're seeing. Like, there's way more stocks out there that you could day trade much more. So I wouldn't say there's too many day traders in this stock right now. Like, day traders look for volume, day traders look for you know, other things like gaps and things like that. But in regards to like on a 4 hour chart, on a daily chart, on a weekly chart, I think technicals are relevant only because when we start to see bullish signals, bullish technical indicators, that's going to invite in more traders, more swing traders, more people to come into this stock long term. And that's what we want, right? That's what will start to increase the volume a little bit if we can gain some more retail buying pressure or even, whale buying pressure, whatever it may be. Now, when that happens and volume picks up, then technical indicators, I think, become more of a factor because now we want to invite day traders in. I mean, I do. I know some people kind of are like, oh, I don't like day traders because then when we get the run up, they dump their shares. But at the same time, that day trading volume is also what may push us past that $13 threshold or that $14 threshold. I mean, that might be millions more in volume pouring in on 5 minute candles that all of a sudden push us past these thresholds that really kick off a squeeze. So I think, the more people that are jumping into this stock, the better. And that's where I think technical indicators are going to make the biggest difference, is that they're going to invite new traders in. So even though, yeah, the stock is able to be manipulated downwards, we want to see these bullish technical indicators to really invite new traders in. If retail bought up all the deep in the money calls, would that prevent their scheme? No, not at all. So, because basically, think about it this way: like, I don't think when you look at the deep in the money calls that are there are just written out by market makers. In my opinion, I don't know that, but here let's just take a look. So, just to kind of explain. So, if look at how much money you make if you sell a deep in the money call. Like, why would you even do it? So the way I'll try to go through this fast, but the way a call contract works, right? So if I sell you this $3 strike for $5.30, you're gonna give me $3 now, and then when you exercise that, I'm gonna get I'm sorry, you're gonna give me $5.30 now, and then when you decide to exercise, you're gonna give me the remaining three. So for me to sell that right now, that means I'm going to get $8.30 per share, which is more than what the share is trading at right now. It's trading at 8.19, but that's only an 11-cent gain on 100 shares. And I mean, at that point, I could just sell these into the market, instead of taking that. So I don't necessarily think that there's a ton of you know, people that are holding 100 shares right now that are going to that are looking to sell their in the money calls. So to me, this is just market makers creating a market. If you go in there and buy that, you're basically buying, directly from a market maker who then probably, I mean, the delta's one. So in theory, yes, if you went in and bought, paid $530, whoever sold you those calls is going to immediately go in and buy 100 shares. However, I don't think that's the case. Otherwise, we'd see some significant price movement, and that would allow you to move the stock a little bit more. But in the case that I'm talking about, where someone's trying to do it to manipulate the stock price and prevent downward pressure, I would imagine they're in collusion ahead of time, right? So all it takes is someone who has the ability to write naked calls, and it doesn't even necessarily have to be a market maker. Like right now, if you needed me to help you out and you're my boy, and I'm gonna be like, okay, yeah, I'll sell you 1,000, calls at the $4 strike. It just puts me on the hook. So us going in and buying them isn't necessarily going to prevent that from happening because they could just write more. I hope that makes sense. How can shorting a stock force the company into bankruptcy? Really, it can't. But I think that's what they're hoping for, right? Because the only time that a company really cares about a stock price is if they're trying to raise money, right? If they want to raise capital, then they can issue more shares, kind of like how AMC's been doing over the last year. I think they've issued like over 400 million shares, like basically quadrupled their float to raise capital. Um, so basically, you know, if this stock's trading at $8 or $100, it makes no difference to Clove because they don't. Yeah, they own shares in the company. I mean, I guess on two sides it can kind of affect them. One is what I just said, like if they wanted to eventually issue more shares to raise capital, it would hurt them if the stock price was lower. And that could eventually force them into bankruptcy, right? Because if they're trying to raise capital or they need to raise capital to stay afloat and the share price is ridiculously low, they're basically, that takes away one of their options. The second part is a lot of times, let's say, where share price does help a company in growth is even if they don't want to issue shares, they're allowed to borrow against their capital, right? So if a company, I'll just try to make this simple. If a company owns 1 million shares of their own, of their own stock, or even if you own 1 million shares of a company stock, if that company's trading at $8, that's $8 million in capital that now they can go to a bank and take out loans and borrow against, right? So then at the same time, if a company stock is worth $100, that's $100 million in capital. So that's where the stock price, I guess, benefits or doesn't benefit a company. But, if you drove this stock down to a penny today, Clove has money in the bank where they could still continue to make money and, grow the company with the cash that they have on hand. Where it would start to become a problem is if that company's losing money. A lot of the short sellers that targeted the big box stores and the big retail stores, they did it because they knew those companies were losing as it was, right? Like your Toys R Us's and your Blockbusters and your GameStops for that matter. At the time, those were all losing bets. I mean, those were companies that were already, dwindling on their way down. And by shorting the stock down, you're making money because investors are losing hope and they're going to be selling as well. But also, you're putting it in a situation where now, if you shorted that stock down, you're taking away their options. They no longer have that capital sitting there to borrow against, and they can't really issue shares. When the share price, let's say, is trading at $1, it's not really that profitable either, unless they want to dilute the shit out of the stock. So, it's kind of a double-edged type of deal, right? I mean, companies don't go bankrupt because of their stock price, but having a low stock price or a high stock price can affect how a company can grow and raise capital. Let's see here. Yeah, so Kevin says Clover Health launches in Florida in a partnership with Value H. Yeah, we cover for anyone who's joining. That was the big news this morning. That Clover Health basically partnered up with this Value H to expand their DC models, and that put more growth in Florida. So all positive news. We did see in early on when the news was dropped, we saw the stock run from 825 up to 846, and then we saw a nice little pop off the open where we got up to 860, but we did close a candle above 850, but not for long. So yep, and now we're trading kind of downwards, but it seems like the S&P 500 is going down right now, and it's dragging the rest of the market along with it. So this isn't a Clove thing. I know GameStop and AMC aren't really good ones to compare to right now because they've just been getting hammered down as it is. But as you can see, like I have DraftKings up here, and that's kind of doing the same thing. And even if we pull up more of like a blue chip type stock, I mean, even Apple kind of shot up early in the day, and it's now trading below VWAP. So it seems to be kind of a market-wide kind of downward trend. But Clove is green on the day. Even though we're trading down here below VWAP, we are up 5 cents. Looking at Apple right now, Apple's also up 4 cents. But 4 cents means a lot more to Clove than it does to Apple at this point, right? Just by comparison. And I don't need to keep AMC up here. I just have it up here because it's a stock we've been talking about. So if anyone wants to look at something else, let me know and I'll put it up. I don't mind at all. I am hella behind on the chat still, so I'm trying to catch up. Uh, Yeah, gingivitis, that's a great point. So I mean, we shoot up high on low volume, but then also we drop on low volume. So, but that's kind of where like having low volume is a benefit, in a squeeze play, right? Like, yeah, high volume is going to get you to drive up, but as volume starts drying up, and really getting to that point where like we've already exhausted our buying and we're holding on to the stock, and the sellers have exhausted their shorting and they're just, now, I mean, you're kind of in this point where now any sort of buying momentum that comes in is going to make the stock jump tremendously. um Can we somehow get it to where you have to hit the like button to get your question answered? I'm sorry. I'm like trying to catch up with the chat. I'm having a hard time. And I'm sure, as more people get into the stream, it's going to be even harder. But I'm trying to keep up and trying to do it. Um, a good coach can change the game. A great coach can change a life. Thank you, coach. Let's go. Hey, I'm happy. If I could help at all, I'm happy. Um, Scotty says, "What's up with the hedge fund dump? Target short sellers open and so far above 10 billion market cap with no earnings." Yeah. So I mean, that's the other thing too. Is like, getting back to that other question, and I know I'm really behind, but you know, I guess the question was like, without earning any money and actually losing money right now, how could you value Clove? Well, I mean, a lot of companies are like that. I mean, just take a look at Tesla. Tesla right now is trading at $707. I mean, they're trading at way beyond any sort of money that they're bringing in, but that's how the stock market works, right? It's not based on what a company's doing right now. It's based on what a company's doing in the future, on speculation, like where's this company going to be at. And yeah, you base some of those forecasts on current earnings and that sort of thing. And so when you have a company that's trading below earnings like that, basically what you're looking at is their losses to decrease, right? So you start off, company first starts, yeah, they have a bunch of cash on hand and they're reporting a lot of losses each quarter, but as those losses decrease, and revenue starts to increase, now you're seeing that flip flop, and then eventually they become profitable, and that's what you're basically banking on is that future growth of the company, and how that company is going to expand and end up making money. Let's see. Sorry guys, trying to catch up real quick. Ago says fully expecting a 15 bagger by 2030. Hell yeah. I mean, I absolutely. You're talking about shit just to get 10 times is what, $80? So I mean, I'm thinking even before then, if you're talking you know, I would say for me at least, um, I'm thinking we hit triple digits with this stock in the next couple years. That's I mean that's probably very optimistic on my part, but I think that with the people they've been hiring and the team that they're bringing in, they're going to start growing faster, and we're going to start seeing more technology side of this too. And so I'm expecting this growth to really take off, and again that might be pretty optimistic for me, but that's kind of what I'm expecting here. Is within 2 to 3 years, let's say that this stock is trading at triple digits on its own merit. And it could be quicker than that. Could take a little bit longer. But what other stocks can you get into and feel like you really have a chance to get to a multiple of, you know, shit times 10 times 15 in that sort of time frame? Usually that type of growth takes a lot longer. Do you think big company competitors like Humana hire hedge funds to short the crap out of Clove to keep the competition down and maybe buy out companies at a low price? That's a pretty interesting concept, and I can see that. I don't know if they would hire them, but who knows? But I would say this: I think that a lot of the people that are shorting this stock and the analysts that are downgrading this stock are heavily invested in companies like Humana and the big competitors like this. So just from that standpoint, right? If I bet on Humana and I got all my money in there, and I'm looking for this stock to be this big part of my portfolio, then yeah, I might short the shit out of this new startup and try to slow their growth. Um, and I really do think that from the very beginning it was all about trying to bankrupt them and trying to get them, not let them get off their feet, not let them expand and grow and push the stock down, and maybe possibly for a buyout like you're saying. I mean, shit, I'm sure they all would like to get their hands on that Clover assistant. All right, let's see here. There we go. Yeah, so Michael just kind of hit it on the head too. So, J.P. Morgan was involved in shorting because they're heavily invested in United Health. Yep, that's kind of what I'm getting at. Is like, there's definitely some other shady stuff going on. I don't know if the actual like companies United Health and Humana would have any part of it, but who knows? I mean, that is how like corporate takeovers and shit happen, right? I mean, if you wanted to kind of, if you're targeting Clove as a potential, buyout type thing, so that you can get in there and get your hands on their technology, their AI. Yeah, maybe you would kind of, have someone else attack the hell out of the stock, get it down to a low enough point to where you could start buying it up. Yeah, Kramer. You can't trust anything that dude says. He flip flops so much, but yeah, he doesn't like their business model. But he's got a company that's got a very similar business model that doesn't have the Clover assistant side of it. So you can't trust anything those guys say. And I think the same thing should be said. We talked about this on the and not to scare anybody or nothing like that, but we talked about this on the roundtable. Blah blah brought something up, and basically, that everybody should be doing their own research, right? Like I'm saying, don't trust Kramer. At the same time, you shouldn't trust everything you hear some YouTubers say too, because you really never know. And I mean, um, and I say that, I mean, I feel like you guys should trust me. I'm always being honest and giving you my humble opinion and everything, but you always got to be skeptical. You never know what's going on. You start listening to people, and someone may not have their facts straight. They may have a bad understanding of something, myself included. And then when it comes to this type of shady stuff, I know like with GameStop and AMC, sometimes it was kind of like, and some of the big YouTubers that were part of that, there was always speculation like, were they getting paid off? Did they get, did some hedge fund pay them so that they could tell us when to sell? Now that might be like real super tinfoil hat type stuff, but at the same time, I guess my message is this: like, you always got to do your own research. You always got to think for yourself. If you see someone on Twitter saying that this stock is going to blow up, do a little digging before you jump into it. Just make sure you're not going into anything blind, and you know always look at everybody, myself included, with a little bit of skepticism and criticism, and make sure you're doing your due diligence at least to that point. All right, that's my speech for today. Um, let's see. Ego says even if they drug the price to 1 penny, I believe an independent investor would get in on this opportunity. Yeah, and I mean, in all actuality, I know you don't either, but I don't see it getting that low. I really think eight's the bottom right now. I really do. I know there's been some people on Twitter talking about they think it's going to drop down to 7 or 6 and all that after earnings. I mean, I could see like the spin, uh, the spin being after earnings, because obviously I'm not expecting them to announce that they're actually profitable this quarter. I mean, we already know that that's not the case. But if we do see that maybe, like things moving in the right direction, that should be positive news for earnings call. But it's going to give the opportunity for people to throw it out there as FUD and then hammer the stock and try to push the stock lower. And that's what I'm expecting to happen, at least on that very day of earnings, unless the news is just so spectacular that comes out on this call that there's no availability for that. But we'll have to see what happens. Can you check out ticker? This is why you kind of distracted me. I was reading that a second ago out of the corner of my eye. Check out ticker THB coach. Goes up to 69 daily. I don't do penny stocks, bro. Um, let's see. I'm showing THB down today on speculation of a risky carpet purchase. You guys are cracking me up right now. Um, Sorry, guys. Just trying to catch up. I'm way behind, so I'm skipping a ton. Um, Holiday says Tar Heel should start his own carpet brand. Humana was a $10 stock in 2003, $100 in 2008. Yeah, so I mean that's times 10 in 5 years. And again, um, I'll say this too: we have that AI, we have that technology side, that I think is going to help this grow even faster, and that's why I'm so optimistic. And I tend to be a more optimistic person than most, even like on the football field or anywhere else. I'm always the more positive. Even though I do look at things, I always try to play devil's advocate and look at things from both sides. I usually tend to side with the optimism. So for me, I think we're going to see faster growth than that. I really do. All right. I'm still trying to catch up. Thomas says one thing to keep in mind with Delta variant increasing, they could adjust earnings predictions down because it cost them a lot during COVID. Yeah, and I think for the most part too, they probably. I mean, this isn't their first. Sorry, this is driving me nuts right now. I need to move this up. I mean, Clove has now been. I mean, we're what 2 years almost into COVID, so I would say that they're pretty prepared for that. And probably prepared for it to be around for a while, right? I mean, I don't know how serious it's going to continue to be. I mean, hopefully they get a good handle on it, but I would imagine that most places with forward thinking would kind of be prepared for another round of COVID and all that kind of stuff, and that it hasn't necessarily gone away yet. Um, Narwhal, that's what it's about right now. Me too. Can't wait to see this community get rich. Um, yeah, and I mean, even beyond Clove, like as we move into different stocks and just kind of we're all millionaires and hanging out, we still kind of hit each other up. I'll still come in. I don't care how much money I have. If you guys want to keep coming on here and watch me, we can just come on here and shoot the shit and laugh at all the other stocks that are getting shorted, but we don't care because we already got our money, or find the next play. But either way, I don't care. I'll keep coming on here and continue to do this as long as people are coming in watching. Pablo's in the house. Look at that. Bought more on the drop to 815. All right. And it does look like we're sitting at 813 right now. So Dan says, Coach, can you take a look at the squeeze potential for VIH? Someone mentioned to me it was at 15 days to cover. Yes, let's take a look at it. So first off, VIH right now is down today, I'm gonna go to a daily view. I'll tell you one thing. Let me remove these studies real quick. It's trading green on the MACD, which is kind of weird because it's been trading green on the MACD since it was at what 1030, and it's at 985 right now. Down a ton from what back in February. Let's take a look at some Ortex data on this thing. Let's see here. So VIH. So I don't know if this is just like my internet connect. Oh, there we go. I was gonna say it's not showing me nothing, but here we go. So it looks like short interest is low, 6%. Estimated short interest to free float 31. Percent of free float on loan 35. Days to cover 13. Cost to borrow is 3.8. Utilization's high. Yeah, I mean, obviously, like these are all good setup numbers. Okay. So then the next thing I'd want to really look at is volume, but we know that shit can come out of anywhere at any time, right? Like, is there any sort of catalyst upcoming? Is it starting to get hyped? Is it because the only thing, so it looks like volume's been about under a million, like 500,000 for a while. Some of these previous run ups where we saw big movement in this stock was closer to 5 million in volume. And yeah, I mean, shit, I would say at any point, all it needs is a little bit of volume to kind of pour in, and the stock could absolutely explode with those kind of numbers and would have the potential to kind of squeeze some shorts out. It's just a matter of, oh, wow. So now I'm just looking at this. Does anyone know what the float size on that is? Because I would imagine it's a very small float stock just based on the volume on it. And we're looking at what, 7,000 versus 500, 4,000 versus 200. So kind of a big setup on the option chain too, at least in August. And then this $10 strike is even more heavily loaded up. And November option chain is absolutely loaded up. Calls versus puts. And okay, now we're gonna check TRADYTICS. VIH. Let's see here. This is one of those ones that it's not really giving data on. So sometimes I've noticed in here it won't have data on certain stocks. I wanted to see what the gamma exposure was. But shit, you know what? I'm gonna write that one down and look some more into it, because what I do like about it, just as like a potential short term kind of runner, lotto ticket style play is, and I got to look to see what the float size is, but it has that gamma squeeze potential based on what I'm seeing on the float. Absolutely high cost to borrow, low float stocks can really explode, and it does seem like it kind of found a base, right? Like that's kind of like as we're sitting here talking about Clove. I mean, the lowest this stock ever was, and I don't know shit about this stock, was 960, and it's basically been trading sideways since April now. So I wouldn't imagine that this thing's going to really get shot down much more, because it's kind of trading at this support level, just looking at this chart. So I would say, yeah, absolutely opportunity to explode upwards. I'm going to do some digging into that one, Dan, and then we'll see what happens. Low work, right on. I appreciate it. I got the best vibes on YouTube. Right on. I'm just waking up, so I think that's why I'm a little calmer than most in the morning. Um, Target short seller says price target times 10 first 5 years, times 5 next 5 years. $100 in 2025, 500 in 2030. Yeah. Hey, that's kind of what I'm looking at. Like, that's where my feelings at. Like, if this is a stock that you hold, and I've said this before too, like, this is a stock that I'm willing to hold until we see those kind of ridiculous numbers like 500, anything like that. Now, that being said, and I'll continue to say this, if we hit a squeeze of any sort of kind and this stock starts trading well above 30, 50, $100 in the short term, like in the next couple months, yeah, I'm going to sell. And then once it falls back down, then I'll jump in for my long-term investment again. I mean, because, and that's just smart trading, right? So, when you sit here and you say like, yeah, I'm willing to hold this stock until it reaches 500 organically. Yeah, I'll hold this stock for 5 years. Knowing that I really truly believe it's going to get up to those prices. But if I can pull out $500 next month, shit, yeah, I'm going to do it. You have to take your profits. And then, eventually the stock will come back down to fundamentals, or speculative growth fundamentals, and, be trading around 30, 40, 50, and then you could jump back in and shit, times 10 your investment. So anyways, that's my plan, at least. Okay, Dan says free float is around 20 million, merger incoming. Okay. Shit, Dan, I'm gonna do some real digging into this when we get off. And um yeah, I mean, shit, I'm gonna end up, it'll be like ATOS. Someone called out ATOS on this one, on this channel, and I liked what I saw. The play didn't work out, but I liked what I saw, and so, I mean, if I do some digging and I like it and I end up, entering in as kind of a short term play or something, I will absolutely, probably put out a little video and stuff, so that everyone has an opportunity and kind of sees what I'm getting into and everything. But I like what I see right now. Some people on Reddit are saying that Clove has no debt and that the SEC forced Clove to record its warrants as liabilities. I'll have to look into it a little bit more. I don't think that the company has any debt. I think they have cash on hand. But so I could answer that part of it. But in regards to the SEC forcing Clove to record its warrants as liabilities, um, oh, okay, sorry, I'm still waking up. All right, so yes. So right now, Clove is debt free, right? They have cash on hand, and I think they have enough cash on hand where if they continue to like lose money in this growth phase, they have enough to basically last like 2 more years. Now, liabilities, because you have these warrants out there, and I could be saying this wrong, but I'm just trying to understand and maybe make sense of what you're talking about. So basically, when you have these warrants, that's the opportunity for people to purchase shares from you in the future, right? So that's basically, you have a liability on your books that you eventually owe these shares out to someone else. And so, um, in essence, yeah, your warrants would show up as liabilities. But now, by kind of making, having everybody basically figure out what they're going to do with their warrants now and not wait until, I don't know what the original date was, like 2030 or something like that. Yeah, that would remove them as liabilities off their books. So I hope that makes sense, but that's basically the way I'm understanding it. Is by removing those liabilities, that's also removing kind of like some of the what would be assumed or looked at as debt, um, which could also show up better on an earnings report. So, really interested to see what happens next week. So crypto's jumping. Says 3,200 watchers on stock Twitch VIH. It definitely looks like it could run. Always the sleepers that run. I mean, shit, we could look at it right now too. Because if I'm gonna jump into this, I'm gonna try to go for something cheap, right? Um, but so if there was to be like a gamma squeeze with a free flow to 20 million, these are pretty significant numbers, I would say. Um, let's just, I talked about how with Clove, you want to see 10,000 outweighing. Well, I mean, with the free float that we're saying is basically what an eighth of what Cloves is. So, I mean, really at that point, anything that's like 2,000, shit, even less than that. I would say 1,000 outweighing calls for outweighing puts is probably a lot here for this type of free float. And we see 6,000, 4,000. I mean, basically 1,000. So if a gamma squeeze was to kick off here, I could see it sending this stock to 35. IV right now, 17. Shit, IV's hella low. But August 20th is also 17 days away. So I would say, just to be safe, I would go out to September. IV's at 68%, which is where you want to be at when you're buying options. You don't want to be buying IV at like, 200% and all that once everybody else jumps into it. But even just to play this safe and let's say go with, right now you can get this 1250 strike at basically shit, there is no bid on it. No one's even trying to buy this shit right now. So I mean, you might be able to throw an offer out there at 5 cents and get filled at 7 or 8. Maybe throw in a limit order at 8 cents and jump on these. That's $8 a contract for a stock that has the potential to blow up down the road. Um, you know, to me, that's pretty decent bang for your buck. I mean, someone's willing to sell those right now at $10, and that's for September. Let's see if we go further out what we're looking at. Yeah, I mean, so here's my thought process. If I was gonna buy calls on this VIH, and shit, I probably will now that we're sitting here talking about it. But and obviously this is a bet, right? I mean, this thing may not turn out at all. Well, you can go in and buy right now this 1250 strike that expires in 17 days for $5, or you can go out and buy the 1250 strike and give yourself 45 days for $10. Um, that's probably what I would do, is go with this 1250 strike right here at the 10 for $10 a contract, and you could probably get filled maybe even for a little bit cheaper. Being that there is no bid, maybe even if you threw it in as like an 8 cent limit, you might be able to get those contracts at $8 a piece. And now, just to look at, let's see here. Pull this over and just play the game right now. All right, so VIH. This is Option Profit Calculator too. Great resource if you ever. It's free if you want to check out like what options would get you. So again, September 17th. Let's say we buy. I'll just say we paid $10 a piece for the contract. And I'm gonna put $35 up here just in case we get a gamma squeeze on that and it really blows out. So what we're looking at here is, let me make sure I have it, the option spread value. So remember, we bought this spread for 10 cents. Even if we don't get a full gamma squeeze and we just get up to, like, let's say $25, because we're just betting that this thing's gonna explode at some point, right? So if it goes up to like the old all-time high, hits somewhere, let's say $25, you're looking at 13, so $1,300, $10 turns into 1,300. I mean, that's a pretty decent bet. But again, it's a bet, right? And really, anything. Now, if it does go up, you're looking at 2,200, and that doesn't even include, Vega. And the way options contracts work is like, basically right now, the IV on this contract is 68%. And the Vega in here, let me see if I can pull that up. Okay, so the Vega on this is 0.01. So, that don't make no sense. Oh, it's probably less than 0.01. Either way, the way this works is like 0.01. So basically, for every percent increase, and it's probably less than 0.01. I don't know why it won't show me. Yeah, whatever. We'll talk about that in a second. But anyways, so basically, as the IV increases, not only will your contract increase with as the dollar amounts move up, but also you're gonna have this IV go through the roof. If you're looking at a gamma squeeze, where all of a sudden, that 68% is going to turn into like 200, 300%, and that can add on an extra $3, $4, $5 to your contract in itself. So, yeah, I really, am looking at that VIH. I'm probably going to go in and buy some today. I mean, shit, at $10, buy 10 contracts, and that's basically you're putting $100 in, and if it happens, you're walking away with like 10 grand, 20 grand. Those are the type of bets I like to make. And, a lot of times they don't plan out, but when you hit one, it's worth it. So Dan, thank you for throwing that one out there. I'm going to do some more research once we jump off and see what happens. But again, I mean, I know I was sitting here talking about options, and if you've never played options, just understand how risky it is. Like, if it doesn't happen, you lose. And that's why, you really got to play with like what you can afford to lose and treat it as if you're going to lose it. That's the way I look at it. It's a bet, like playing this VIH. If I did it, it's a straight up bet. If I put $10 in, if I'm only really willing to risk 10, fine. If it doesn't happen, I know that I'm only going to lose $10. But if it happens, I mean, you could make a lot of money off it. So, just something to consider. All right. And I see Levi just said that too. You can 50 times your investment or lose it all. Yeah. And that's why, like, it's never good to put a shit ton of your account in there. You're better off getting, shares when we're talking about Clove, or if you're talking about a long-term investment in something or anything like that. But when we're sitting here talking about, this VIH, which I don't know much about, and it may not happen. It may just fizzle out and nothing happens with it. And I just want to bank on, betting on something. I'd much rather throw $100 in there and get the price action of 1,000 shares than throw, $10,000 in there to get 1,000 shares. And that's the way I kind of look at it on those bet types plays. And VIH is, it seems like it's just kind of like waving around. So yeah, I like it, Dan. Thank you. Let's see here. Rick says for VIH, what about the longer call, 218? Let me check it out. So, just looking again. So, like, I mean, if you went all the way out to February, you're going to be paying $20. So, you're going to be paying double the amount. Let's just say you could probably get filled here for somewhere around $22. You get filled here for $10. So, you're going to be paying double the amount in contract. Let's even just say $25. But you also have 200 days now. That would absolutely be the safest way to play it. But I just look at it from, the aspect of, now, could this, nothing happen in August, nothing happened in September, and then it blows up in November and I missed out on it? Yeah. I mean, so, absolutely safer. And even if you look at the difference there, like if you said, okay, because I'm giving myself all the way to February, I'm going to go out and buy this $15 strike. I mean, that could work too. There, I mean, that's definitely an option. It really just depends, right? Like getting way out here is going to give you more time, but it's going to cost you a little more money. Um, for me to throw $100 in here and grab 10 of these, giving me 45 days on this play that I'm going to be watching this stock for 45 days. It's either going to happen or it's not. But yeah, I agree with you, Rick. Like if you wanted to be safer, shit, even this is decent pricing going in here and maybe buying. But I wouldn't just go in and buy this for $15. It's showing that the bid is 5 and the ask is 15. You might be able to throw a limit order out there for $10 and get it. So, that could be and shit, and really, you can't go wrong with any of those. Those are pretty cheap. But this is something I want to point out too: is you want to be careful when you're buying options, right? Like we talked about, I made that Chalk Talk video the other day about the difference between a market buy and a limit buy. So the 12.50 strike, someone's trying to sell for 25 cents. The $15 strike, someone's selling for 15 cents. The 1750 strike, someone's trying to sell those for 35 cents. That's off. That's wrong. Someone's trying to take advantage of a new trader. So they want you to go in with a market buy right now, and you're going to end up paying them 35 cents for that options contract when for 25 you could have went way deeper in the money. You got to be careful, especially with options contracts. Like really pay attention to what's going on. And that's one of the reasons that you don't want to do a market order, because even if you're looking at, let's say I wanted to buy 10 of these and I'm willing to pay 10 cents, right? So, but I do a market order. Well, this ask right here might be, someone willing to sell 5 at 10 cents, but then I get filled for my next 5 at 30 cents because some asshole, threw in a 30 limit sell order in there. I guess I'm the asshole for putting in the market buy, but you just got to be careful. I would always do limits, even if you want the stock. Like let's say I wanted this and I wanted 10 of these at 10 cents, but I'm willing to pay 12. I would just do a limit buy at 12 cents, and that way I'm guaranteeing myself, I should be guaranteeing that I'm going to get filled at 10, but I'm also guaranteeing that I'm not going to get absolutely raped if all of a sudden there's a ask order sitting in next at there at 20 or something like that. So I hope that makes sense. What was that? Oh, we're almost approaching 8 o'clock. So this, I should have called this out earlier. It looks like the bottom of the day was 8:06. And actually, I was just joking, but we did tap off 8:06 twice now, right? Right here and right here. So that could have been a little bit of a double bottom there. And like clockwork, Coach B's getting ready to sign off soon, and we're starting to see some upward momentum. It's normally how it happens. But one more penny and I could close another stream green if we can get to 8:16 in the next 10 minutes. Anyway, so I'll be looking at that VIH play, maybe something to get into. Just looking around the market, the S&P 500 is on its way back up. I talked earlier about how it fell down and now it's climbing up. It is, let me throw my study back on. It is now trading above VWAP. It's looking to cross over. Just so you guys know, I have these lines and shit up here. So whenever I do these lines, I have them set for different time frames. But the green line is always, I always set it up so my green line is my fastest line, and then my orange is my slower one. So if you're ever wondering what's going on with all these lines I have up on my screen, and then the blue one, if I ever have it up, I'll take that off, is the slowest line. And that's just a way that I remember looking at it. So when I'm looking at stuff, anytime green's crossing over orange, that's a bullish signal. I just keep the green as my faster signal. So like right now, even with Clove, if I was day trading this on the 1 minute, my green crossed over my one, I may want to enter in there and maybe ride this thing up to VWAP, something like that. We're also looking at a crossover here. So anyways, let's see here. I know I'm not trying to skip over the chat. Everyone's been downvoting Tar Heel every day, I think, as a joke. But man, you guys got to go back and change those. It was funny, but I don't know what it was at yesterday when I signed off, but I got off the stream, and when I got off, he still had like 15 downvotes. And let's see, John Doe's asking about leaps on Clove. Let me see where the IV's at. I bought some leaps on Clove that I'm still holding on to a while back, and I mean, shit, I think I have like $8 and $10 strikes. What the hell did I do with my option chain? Did I close it out? Oh, I minimized it. There we go. Clove. I mean, IV is, for a meme stock and a highly manipulated stock, 100% IV is low. For, your basic run-of-the-mill stock, 100% IV is high. So, I mean, I want to clarify that straight off the bat. Like, I mean, you're looking at a stock like VIH. IV affects how much you're going to pay. IV's 40%, 60%, 17%. You look at Disney, IV's in the 30% range. I mean, that's where like common stocks are, right? But when you look at Clove, yeah, we're paying a little bit more for these options right now. So just something to be aware of. But I think 100's kind of low for a stock this volatile and a stock that has this much potential. So if we went all the way out to January 2023 and kind of evaluate this. So the $5 strike right now is $5.10. I don't really see the benefit there. And the only reason I say that is if you were going to fork out $510 right now, you might as well just fork out $810 and actually own the shares with no expiration dates. Now, that being said, if you were going to do $800 for 100 shares, I could see going with a $7 strike and getting double the amount of shares. So now I can buy two of these for 406 or 860 as opposed to one of these for 812. And it's going to give you the same price movement, right? I mean, I think Clove is going to be trading above $7 for sure by 2023. So let's just figure out what's going to happen here. So if I'm able to buy this right now for $430, every dollar that Clove moves up from this point forward, I mean, Delta's going to eventually get to 0.99. You're going to make $100 for every dollar move, the same way that you would if you owned the shares. So if like for that, I would maybe go with that one, only because you're going to get that dollar for dollar movement for the most part, and it would allow you to double up what you would have been able to buy with shares. That's the way I kind of like to look at it. I mean, you can't go wrong there. And then if you look at like the grand scheme of things at the end of the day, you're pretty much, I mean, at that point, honestly, I would maybe go with the $3 strike. You pay 70 extra dollars, and now your full exercise cost puts you at 885. But still, I would say buy shares if that was the case. If I wanted to go leaps right now, I might even go into the $10 strike and get three of them. Basically, all that's saying is you need to be trading at 1355 by January 23rd, or this contract is worth nothing. But I would imagine Clove's going to be trading well over 1355 in, what would that be, about a year and a half? Tar Heel says his girlfriend downvotes him daily. We downvote because we care. Oh man. All right, Levi, I'll check you out later. I just seen this. Let's see here. Star says post coaches link in Reddit, etc. Let's grow this channel. Yeah, Hey, I appreciate it. I really do appreciate everybody coming in here and anything you guys could do to help out. I know I mentioned it earlier in the stream and I talked about it yesterday, but I had just mentioned that I thought it'd be cool. Like we have this community going, to do a Discord server. Not necessarily for anything specific, but just so that like if we wanted to keep talking throughout the day, maybe even in the pre-market, throw out some other options plays. Dan threw out VIH today, things that we can all look at. And I mean, shit, I get plays from people all the time. Maybe we could share charts on there, and just talk about all stocks in general. And Ago started building that yesterday and hit me up, and I really appreciate it. But so that should be coming soon, and I'm excited about it. I think it'll be fun. I think that way, especially once I go back to school and go back to work, I can kind of keep tabs on everything on there too, and get some of your guys' plays, because I mean, shit, I know Fluffer's been calling out some runners too, and just hit a pretty decent milestone in her trading. So I'd love to get everybody else's input on the stocks that you guys are looking at on a daily basis. So that's something I'm excited about, just talking about this community and this channel, and it really is this is really cool. I mean, I look forward to it now every day. Scotty hit me up this morning again on Twitter, and sent me some cool stuff to get fired up for the day, some music videos, and it just just in general. I know co-creator had to jump off, but I look forward all you guys to kind of seeing everybody in here and kind of having my coffee and kicking my day off. So um, this is really, really, really crazy and unexpected. I know I didn't really think that I would even be live streaming, shit, 2 months ago. All right. John says IV intermittent volume. No, it's implied volatility. So basically the IV on a stock is, um, that has nothing to do with the underlying stock price and everything to do with how much volume is coming in. So, the volatility of an or the implied volatility is basically like what the market thinks is going to happen. So, if all of a sudden you saw, the IV on Clover right now is 116%, and the IV will decrease as we get closer to expiration too, right? So um but basically, if all of a sudden you just saw people just buying the shit out of these higher strike prices like 29, 26, 20, and just loading up like we see down here, that means that there's implied volatility to go much higher. And the same thing works with like puts way down here. So all that affects the IV, right? That's saying that people in the market are buying up these contracts, and there to be some major movement in the stock. So then that directly affects how the premiums of these options contracts are priced out, right? So if we look, just looking at you can kind of tell where most of the money lies too. Obviously, IV is going to drop usually as the further away you get, from expiration. Like your leaps are going to be less IV than closer in. But right here, we could see that there's 128% IV at August 13th. So that would tell me that there's probably a lot of volume pouring in today, and there is. I mean, so people are starting to buy up. It looks like calls for that August 13th date. And just to get, like, let's look at AMC. AMC. So I mean, their IV is even higher. I don't know if you guys could see this, but it's like 169, 179, 175. And like I said, usually it decreases, but then all of a sudden we see a big increase here on September 21st. So that would tell me that there's probably a lot of open interest there, at least more than normal. And then you come out here and you see 19,000 at the $80 strike, and that might be what we're looking at there on why the IV's higher there. And then each individual strike price has its own IV too. So again, implied volatility. Let's see here. Higher the implied volatility means the market thinks it will go up. Yeah. Or you got degenerates like me just going in and placing bets, right? Like, I mean, if we all go in and start loading up the VIH option chain, I mean, it's so cheap. All of a sudden, you'll see the IV jump up on that too. But yeah, it's because we're expecting it to go up. So absolutely. Sometimes you can kind of look at that and kind of gauge like where you think the options market thinks the underlying stock is going to end up. That's not all. It doesn't always work out that way, though. I mean, we've been talking about on here, like, you know, Max Payne, all that kind of stuff, and how that all plays into effect. And there's always people on the other side of the trade, right, that want you to lose so they can make money. VIH is on Yahoo's most shorted list. Haven't seen Clove on that list all this time. So the one thing I'll say about that is it's very hard. I mean, I know I talked earlier about, trusting YouTubers and trusting this and trusting that. Trusting the media is kind of the same way, right? Like everybody, I feel like you always got to look at stuff with a little bit of skepticism. I've seen some articles in the past that have come out, basically like, hey, this is going back to like January. Don't put your money in GameStop. These are the top short squeezes, when obviously GameStop was the squeeze. So sometimes I think it's kind of like a distraction, like they want to show you these other ones to maybe benefit some of the hedge funds that are so deep in shit and some of the bigger ones. But also sometimes that data is based on old information, right? So they're looking at the short interest reports that come out every 15 days. And so they're looking at somewhat old data. Like I know sometimes there was a lot, I think it was like highshortinterest.com or something. I don't remember the exact site, but that website only updated every 15 days. So you're obviously getting like more accurate data, I feel like, with like a Fintel or an Ortex, just because they're giving you like daily data updates. And speaking of which, since we're still talking about VIH, I'm just going to check the short screener list on Fintel and see if it's on there. So this is today's Short Squeeze Explorer. And I do not see it on here. And let me just search. Might be quicker. No, it's not coming up. All right, so I'm gonna do a little bit more digging into it. I really like it though. I think I am gonna couldn't hurt to throw $10 in or something and just little lotto ticket play and see what happens. But anyways, it is 8:05. I do gotta go. I'm trying to. Kevin says, did you talk about the new news Clover Health launched in Florida? Yes. So I mean that came out earlier this morning at 6. I think that's why we saw that initial increase. I really needed to dig into it more because this came out while I was on the stream. But obviously, I think it's bullish for the stock. I think it's great news for the stock that shows that they're expanding. And it's also, I think it mentioned in there that it was going to be with their DC model, which is the one that Clove gets to make more money on. So I do think that that's going to be bullish and positive for the stock as more people digest it, myself included. Let's see. Oh, there we go. Pablo's digging into it. Someone said I was weird and mean in your comments. Not sure I can handle that kind of feedback. Oh, man. Sorry, guys. I just want to catch up real quick before I get off. Oh, yeah. Tar Heel's first stream. Was I on your first stream? If that was the one where you took your shirt off, I think I was. The first Stocktails. That was a kick. I remember going on there and watching that one if that was the first one. But that was fun. All right, anyways, you guys make sure you check out Tar Heel Blue later on this afternoon for Power Hour. He'll keep his shirt on, I promise. And I'll probably be in there checking it out in the chat and good fun. He's usually more green than I am. I am closing the show down 0.03. Another red day for Coach B. But I love you guys. Check you guys out tomorrow morning. I'll be back on. And again, make sure you go check out Tar Heel for Power Hour. Have a great day.